A simple trading setup is identified here on the Euro USD, where I'm looking to take advantage of a bearish momentum going into the new week. And why have I come to this conclusion at this point in time? Well, if we look closely into what has been happening since the beginning of February, we can see our price has been finding lower lows and lower highs. And as you can see with the visual representation of the arrow line I'm drawing here, we can see the lower low ended at 1.03430 area, after which we saw the beginning of a retracement phase at the beginning of May 2022. And during the course of last week's trading session, we begin to see potentials of a bearish momentum. And this is more one of the reasons why I probably want to be looking for a bearish momentum going into the new week. Now, in addition to that, we want to connect the series of lower highs. And if we do that, we have this bearish trend line that we've identified here on the time frame on your screen with a um, red line. So now with this information in hand, the second thing we want to look at is what has been happening since the beginning of April. And if we look left, we can see that since the beginning of April, we had this impulsive move to the downside, which should now be our impulse leg going forward. So with an impulse leg identified at this point, definitely after every impulse leg, we should be expecting a retracement phase of that impulse leg, after which we will anticipate a trend continuation to the downside. And if we look close into what happened since the beginning of May, we saw our price has climbed from 1.034 area into 1.08 area, after which we started seeing um, bearish momentum building up into the later part of last week trading session. So with this information in hand, how do we take advantage of any bearish momentum going forward? So the first thing I will do is to run my Fibonacci retracement tool right along the leg of that impulse leg to identify a supply zone around our golden zone area to guide our action going into the new week. And if we look closely into that, we can see that we have um, price rejected the area between the 50 and the 618 area, and I will be using that as my new supply zone going forward. So if you allow me, for the sake of clarity, let's give this a label. We label this supply zone. So we have a supply zone around that area. So allow me to delete the retracement tool at this point. Now with the supply zone identified, and if we look at what is happening, we can see that the supply zone shares a confluence with the bearish trend line. And also around this confluence, we begin to see structures that looks more like a reversal pattern. If we go down to the daily time frame, we begin to see how that forms. But before we go down into the daily time, into the lower time frame, the next thing we want to do is to identify a key level that will be guiding our actions in the new week. So if I look left, we can see that we have structures around this area where price has at one time been a support level. You can see here we have here a support level here. We had a support level here before we saw the breakdown around this area. And then this area appears to be a resistant level, and the same thing, a resistant level around this area. So if you look at what has been happening in the past 3 to 4 months, we can see that we have a significant area which we can be using as our key level going forward. So with this information in hand, we want to be drawing our key level right around that area to guide our action going into the new week. So give me a moment to identify this area so that we can have something to play around. Okay, so we have something around here. So we have our key level right at around 1 point. Give me a moment, please. So we have it right at 1.08. So I will want to label this so that we could have a visual clarity of what we are talking about at this point. 1.08 thousand. Okay. So we have that in dollars. Let's place this right at the bottom on the left hand side of our screen so that it won't muddle up with the structures we are working with. So we have the key level right here at 1.08 area. So what does this key level do for us going into the new week? This key level shall be our yardstick, as we want to be looking for price to continue to oscillate right below that key level, which also shares a confluence with the supply zone and the bearish trend line to take advantage of a downtrend continuation. However, if we see price break above that key level, then definitely we want to hold on to see a retest before we could join a potential rally to the upside. So this key level is like a yardstick for us to determine if price is going to be going up or it will be going down. So now, how do we take advantage of this bearish momentum going into the new week? So let's scale down to a lower time frame, let's say the 1 hour time frame, where we can actually bring into perspective, sorry, the 4 hours time frame rather, where we can bring into perspective what has been happening so far. So if we go down to the 4 hours time frame, we can see that we had this bullish trend line. We have this bullish trend that began sometime in the mid of May, where we saw price continue to find higher highs and higher lows before it tested 1.08 area after we begin to see a decline in momentum of price action. So if we connect a series of lower highs at this point, if we bring out our line chart and connect the series of lower lows at this point, we will definitely be having something that looks like this. So let's give this, so this is my bullish trend line at this point. So we have a bullish trend line at this point, and then we can see that we witnessed the breakdown of the trend line right at the beginning of the month, hereby giving us a clue into how sellers might probably be setting the pace or setting the tone for the new month of June. So now, following the breakdown of that bullish trend line, we saw a quick rejection of that line during the later part of last week trading session, after which we saw another scenario that looks more like price will be going for the to the downside. So at this point in time, what we want to be doing around this area is to look for entry points right below the key level, right below the bullish trend line that we've identified here, and this is also right below the major bearish trend line we identified on the daily time frame. So allow me to give you a clue into what my expectations are, as I will be having an entry point right under this area. Yeah, you can see the purple dotted line. That will be our entry point at 1.069997, where we will be having our stop loss right above the previous structure, which falls right, which falls right around this area with about 65 pips thereabout. So now, where will our take profit target be going into the new week? So personally, for me, I want us to um, look at one scenario here. If we look left, we can see that we have an area around 1.05 area that has been a demand level in the past. So because of the structure here in the past, I want to be looking for my first take profit target around this area. After which, if price breaks below this area, then definitely I want to be adding more position in that regard. So we have a demand zone around here. Allow me to label this area as well. So with a demand zone around this area, we want to be having our first take profit target falling right around that area. So let's have it right inside, and we have in the center. So we have a demand zone here. So let's have our take profit right above 1.05 area, which approximately falls within our 210 pips. So we have this to play around with going into the new week. So at this point, I would like to pause the video here, and let's see how price plays out as we move into the new week. So please note that I shall always do regular updates in the comment section of my trading view account for reference purposes. So if price gives us another scenario, then I will be giving an update to guide us on what to do next. So thank you for watching and do have a wonderful night rest.